What's cheap out there in semiconductor land anymore these days?
Not much.
Not much at all.
But how do you feel about solar?
Now, wait, don't click off this video because we said solar.
And cheap.
Yeah, two keywords. One not so good. But it has been a minute since we've talked about solar companies. We've done videos in the past. They were having their heyday back in 2023. Remember those good old days? Mm-hmm. We're going to talk about one company, First Solar, today that could be the cheapest chip stock out there.
But of course, cheap is always an unknown. Value is always an unknown because it's unknown future outcome that makes it cheap. In addition to a research piece we did late in 2025 on First Solar in Enphase, where we basically said this is something that appears to be cheap, but especially for First Solar, there was some looming possibility of revenue actually headed in decline. We have some tools that we're putting together to help you keep track of the businesses that you invest in or think you might want to invest in, like First Solar and the solar market at large. But let's get into this and talk about why it has continued to decline, why it might be a value now, depending on certain things happening, and what the company's edge is currently. Technological edge, durable advantage, probably not a moat.
Don't use that word.
No moats in software, no moats in hardware.
First Solar, we will file under the Specialty Energy and Equipment Company. They're on the very far left, the upstream part of our semiconductor supply chain. The reason they're not directly linked with tech equipment and devices is they're not selling products to the end user. Rather, they're selling their solar panels to energy companies who then provide that to the data centers, for instance.
And here are who some of those customers would be. This is why you will often hear the type of solar panels that First Solar manufactures referred to as utility scale solar panels. So a typical customer in the US, they also have customers in India, but most of the revenue comes from the US. Think of NextEra Energy, LightSource BP, which we're going to talk about again here a little bit later. AES, who's currently getting acquired by private equity consortium, Brookfield Partners, and so on and so forth.
And we have just a couple of competitors listed here for First Solar, Jinko Solar and Canadian Solar. These two companies, obviously not an exhaustive list for solar panels. There are actually tons of competitors, especially a lot of companies in China. But there are some new barriers to entry for some of these companies that could be a tailwind for First Solar, which we're going to come back to again here in just a moment as well. But first, let's talk about what exactly First Solar does. What type of panels do they provide?
As mentioned, they are utility scale solar panels. These are not the type of solar panels that you would probably purchase for your roof. Or maybe if you have a really big giant yard and you don't mind filling the whole thing up with solar panels, I guess maybe you could buy these and install them. But anyways, these are thin film solar panels. It's different from the typical silicon crystal panels, either polysilicon or monocrystalline panels that you would install typically on your house. The traditional silicon-based solar panels are much more efficient, especially on the high-end panels. Usually will convert over 20%, ultra-high efficient panels, even maybe high 20%, approaching 30% efficiency, will convert that much of sunlight into actual energy. In contrast, First Solar's thin film panels, which are based on a very different semiconductor material, a compound material called cadmium telluride, traditionally are much less efficient, less than 20% efficiency. Why would a utility want to use those? Well, they're very cheap. So if you're a utility company, you have the land to put a solar farm in, you can fill that thing up with a bunch of these things, and it doesn't matter that it's less efficient than silicon, the panels cost you less. Those are the basic differences, and the manufacturing process, as you can see here, uses thin film deposition like a CVD process. So think of all of our favorite deposition companies, uses those deposition machines to deposit these thin films of semiconductor material on top of a substrate. And First Solar specifically has 5, soon to be 6 facilities in the United States. So they're a domestic supplier, and they're launching some new tech to make these things even potentially more efficient and last a lot longer for their utility company customers.
This new manufacturing process, cure or copper replacement manufacturing process, and they're going to be upgrading all of these. Their plan is to upgrade to this new manufacturing process across all of their facilities. This process is appropriately named because it reduces the amount of copper and replaces it with some other Group 5 elements. The first line of this manufacturing process was launched earlier this year, just a few weeks ago, in Perrysburg, Ohio. Tell us about perovskite.
Part of this new manufacturing technology does make use of some other additional materials besides just cadmium telluride. It appears that one of their top suppliers, 5N Plus, is still providing some materials for perovskite as well. But this is a new deposition layer that is added into the solar panel substrate that basically helps increase the amount of sunlight that can be absorbed. Also decreases the degradation of the panel over time, over a 30-year lifespan. As you could see from the previous slide, First Solar claims up to 8% in increased lifetime energy yield. So First Solar, domestic US manufacturer, which helps with some of the geopolitical stuff happening right now. Also this pioneer in these thin film solar panels, and they are continuing to invest in this technology, improve it. They made a very small acquisition of a company called FSLR, Swedish company, back in 2023, and then also purchased the rights to some IP from a private company called Oxford PV, as in photovoltaic solar panels, earlier this year in 2026 for this perovskite manufacturing process.
I thought that's what the PV was for.
Perovskite, maybe it's a curveball. Maybe it's not photovoltaic. Maybe it's perovskite. Could be.
Doesn't matter now.
Doesn't matter. I said it.
The short story, even though I think we've given you the long story.
Sorry about that.
There are some factories in Vietnam and Malaysia, and there is one in India for the Indian market, but by and large, the manufacturing process is handled within the United States. The panels are very cheap. The efficiency of the panels is increasing, which makes them more attractive to utility scale companies and, of course, data center construction projects. So let's go over some of the financials for First Solar and think about what makes this stock a potentially cheap semiconductor stock.
Yeah, because on the surface, you would look at Q1 2026 and think, well, this is a growing company. Why is it so cheap? Revenue increased 24% year over year to just over $1 billion, a new record. Profit margins increased. They did get a pretty big benefit once again from some tax credits that caused a 6 basis point increase year over year in gross margin. And of course, that trickled down into really big increases in net income.
So that's all good. Check, check, check. Let's look at their balance sheet. Not so bad.
Quite good, actually.
Yeah, have over $2.4 billion in cash on balance and not a ton of debt, very little in fact. So check, again, looks great. But let's look at the guidance.
Yeah, this is where things start to get dicey, and referenced earlier last year when the company was still growing and still forecasting some growth through the end of 2025, the real thing that was concerning was that the revenue growth was not long for this world. And you can see that here finally start to show up in the full year 2026 guidance, which they just reaffirmed. But total production and then resulting net sales revenue from the sale of the thin film cadmium telluride solar panels is expected to be slightly down or flat compared to 2025. There also are going to be some capital expenditures. They are expanding and are building a 6th facility in South Carolina.
Yes, First Solar provided a comprehensive list of some of the tailwinds that they have going for us, I think via Claude slides, just saying, which is great.
They're being efficient.
Maybe I'm wrong. In green, there are some of the things that are happening today that First Solar can call a tailwind, especially tax credits. There's still some tax credits from the Inflation Reduction Act that started a few years ago through 2029. Because of their domestic manufacturing, First Solar gets to benefit from those. But one of the biggest things that we need to focus on that is currently an unknown is the bottom, the polysilicon Section 232. What is that?
This came up last year, mid-2025. This is an investigation being made into whether the importation of crystalline silicon, or you see that stylized as C-SI, crystalline silicon, either polycrystalline or monocrystalline silicon for the use in solar panels, is being investigated as a possible national security risk. Really? Solar panel importation, a national security risk? I can hear the scoffs and the guffaws as we speak right now.
But when you're trying to build a US-based manufacturing, a domestic manufacturing company that provides jobs and sales within the US, it could be.
Yeah, there is some history here where, as you mentioned earlier, Casey, the most fierce competition does indeed come from China. And there are decades of history where there's basically price dumping that happens pretty frequently that these companies will use to pick up market share. If they're getting some sort of state aid, they can sell at or below cost. Basically, they're incentivized to lose money to gain market share, and that could be deemed as an unfair advantage. Perhaps new tariffs get put into place. This would be a different type of tariff law that would actually deem this a national security risk, and then as a result, First Solar gets some protection here. And they think that if this does get concluded and passed sometime in Q2 2026, so this month, maybe in June, they think that they will get an influx of new orders, which we should now talk about because that was the crux of the problem for First Solar the last couple of years, especially the last year. The backlog of orders continues to decrease. On the left is where the backlog was at the end of 2025, just over 50 gigawatts of backlogged solar power generation because they sold more of their backlog than they received in orders in Q1. That has now been further reduced down to just under 48 gigawatts.
So they're filling old orders, but not creating new orders.
Yeah, and this backlog basically goes out through the end of this decade. But this has been the headwind now for a while because we shared this slide with Semi Insiders last year. This backlog actually peaked at well over 70 gigawatts in 2023, end of the last solar power bull run. And you can see it's steadily decreased since then over the last few years. And they have yet to receive an influx of new orders to fill this backlog back up. Besides First Solar working through its backlog, they also, late 2024 and 2025, had that sizable cancellation of backlog from LightSource BP. That also decreased their backlog. So, Casey, you mentioned data center demand. Perhaps that's the inflection point here. But really, this is all going to ultimately boil down to, unfortunately, geopolitics. Does First Solar get some protection from the US government that causes an increase in orders again from their utility scale customer base?
So everybody right now is looking for cheap stocks. First Solar is a cheap stock, but everything that's cheap is usually cheap for a reason. As of yet, there's no indication that revenue is actually going to kick back into growth mode. There's still a lot of unknowns here for First Solar. Here's the valuation, currently price to earnings and price to free cash flow, both about 12.7x. And now let's take a look at our reverse DCF. Not a high bar to clear for First Solar at this point.
Yeah, assuming that revenue and profit does in fact not decrease significantly this year and possibly even into 2027. That's the baseline assumption. And if you assume that, it indeed appears like it could be a pretty low bar to clear. Per share profit growth of about 7% over the next 5 years. That carries us through the end of the backlog period, through the end of this decade, and terminal growth rate of 0%. So yeah, cheap stock potentially, if they can reignite growth. And unfortunately, it is going to very much depend on some political conclusions that will be made here in a month or two. So, Casey, opinions on this after taking a look?
I'm mildly interested. But the problem is this company, First Solar, has some hallmark signs of becoming a value trap. So we might need to be patient with this one. We'll be watching it closely and we'll perhaps take a small nibble here in the future. If you want to know a great company that has been playing in the data center infrastructure race, check out this video we did on GE Vernova. They just had a banger of a quarter. Great outlook for GE Vernova. Check it out right now.